What is going on, everybody? Welcome back to the channel. And in today's video, I want to do something a little bit different, and I want to do somewhat of a trade recap video where we take a previous trade setup that was recently posted in my premium Discord that is actually playing out pretty well right now. So I figured it would be useful to the CandleMafia for me to make somewhat of a trade recap video where I kind of break down what we were looking at that made us expect this setup to present itself. And then I want to run through all those levels of confluence that we saw, kind of that checklist that I was looking at to certify this as a confident trade setup, and then talk a little bit about take profits and just generally how we trade on this channel and why we actually trade this way. But before we get into it, guys, don't forget to hit that subscribe button, smash the like, and click that notification bell so you don't miss any of these awesome trade recap videos or urgent market updates that we upload to the channel. Without further ado, let's go ahead and jump into the charts. I'm going to bring up the actual setup that I posted in the premium Discord and kind of just show you guys the post of how I set these up, and you'll kind of see what we were looking for in order to be looking for this long position. And then we're going to actually hit the chart. I'm going to show you the exact confirmations that we were looking for this particular trade that made it feel like a very, very confident setup. And we're also going to talk about how I use volume profiles to not only catch beautiful scalp trades when price is just ranging, but also how we use these volume profiles to actually set ourselves up for a good entry into a long or a short if price winds up running out of our range and going to hunt out higher prices or lower prices, depending on if you're longing or shorting, because we can use the volume profile to kind of lock in really good entries, and then when price leaves that range, we could actually have a really nice entry that we got in at the opposite end of that range. So without further ado, guys, let's go ahead and jump into the charts. We'll go over that Discord post. We'll show you what we were looking at for that setup, show you the confirmations, talk about some take profit levels and why those take profit levels were there, and then we'll get into that secret volume profile sauce. Let's get into it. So, guys, before we jump into the actual charts, I do just want to cover that post that I put in the premium Discord looking for this setup. And you can see here, we posted this, said if we are able to put in bull divs or bullish divergences on the 1 and 2 hour with money flow coming up on the lower time frames, this wouldn't be a bad scalp to watch out for. Obviously, we're in a bearish environment, and the 2 hour VWAP just got rejected at the 0 line. So be careful with the longs and make sure you manage your risk, which is just general advice when you're getting into any trade. And then we said 12 and 15-minute bull divs also looking to print soon, which would be kind of a level of confluence. But you guys can see here, we were waiting to come down to this key level, put in those bullish divergences on those specific time frames, and that is where we would be looking to go long. And we'll get into this a little bit deeper in the video. And our original target for this trade was essentially the value area high of that volume profile range. If you don't know what I'm talking about when I mention the volume profile, definitely get on my YouTube channel and check out our volume profiles playlist. This is one of the most powerful trading tools I have ever used, so definitely go ahead and get up to speed on these if you don't know what I'm talking about. But that original target for this trade was the actual value area high of that range. And if we go ahead and pull up the charts, guys, you could kind of see this is the range that we were looking at. You could see we have our value area high at about $21,900, and you could see our value area low is coming in here at $21,600. And here is that key level at about $21,478 that we were looking to come down to start looking for those bullish confirmations to get into this long position. So, as you know, in that post, we were looking for bullish divergences on the 1 hour and the 2 hour with money flow coming up on lower time frames. So, as we come down and approach this key level, as we work our way down to that key level, this is where we were looking for our confirmations. And again, those confirmations were that 1 hour bullish divergence. And you can see here that we do have our price action making lower lows with our momentum waves making our higher lows, giving us that pinch point that is a bullish divergence. And this was confirmation number 1. Now, we did come down to our key level, which you could consider somewhat of a confirmation. Again, we're not taking trades blindly here. We're not just waiting to come down to a level and blindly long levels of support. We are looking for multiple confirmations, but making it down to that key level is definitely criteria number one. So you sit on your hands until price comes to your level. I talk about these key levels as nets, right? You want to act like you're fishing or trying to trap something, and you want to set your net, which is your key level. And in this case, our key level was starting at about $21,478. So you're sitting on your hands waiting for price to come to that level. Once we came down and actually started tapping that level, this is where you start doing your analysis and looking for those confirmations. And although there are some things that were foreshadowing this move a little bit earlier on the lower time frames, you want to understand that if you, for example, the 1 hour bullish divergence was that first confirmation we were looking at, and you could see we got this confirmation right here, right on this green candle right here. This is where we started printing that green dot on market cipher B, which starts the printing of that bullish divergence. But if you were to go down to the lower time frames, like I was talking about, the 12 and the 15-minute bull divs, that is kind of where you could come down to these lower time frames. Look at the 15-minute. You could see that we were actually putting this bullish divergence in on the 15-minute right here, and that green dot would have actually been able to get you into a much better entry. I don't know if I would say a much better entry, but you would have gotten in a little bit lower. However, it does add a little bit of risk to your position. The reason it adds risk is because this 15-minute bullish divergence was actually printing before that 1 hour bullish divergence, which was the actual confirmation that we were looking at. So when you're looking for other entries on lower time frames, you have to understand if you are front running your main confirmation, again, in this case was that 1 hour bull div, you have to understand anytime you front run anything, there is a chance that it won't play out and you won't actually get that bull div. It could get invalidated. That's why I typically recommend that people wait for things to print and confirm before actually taking an actual trade, right? But you could have gotten a little bit of a better position with that 12 and 15-minute bull div, and you can see here on the 12-minute we have the same thing. You have your low here, your higher low on your momentum waves. You have your momentum waves coming up, your price coming down, giving you that bullish divergence, and that 12-minute bull div actually would have gotten you in at an even better entry than the 15-minute. But it was essentially the same thing. But basically the takeaway here, guys, is if you go ahead and try to front run your main confirmation, it is a little bit more risky, but that comes with the possible benefit of getting a little bit better of an entry point. Now, even if you aren't entering your trade based on that 12 and that 15-minute, this is something you could keep an eye on. You could even just look at these time frames and say, hey, we got the 15-minute bull div. We're starting to come up. Things look pretty good right now. And then, that can at least give you a little bit more confidence to watch this confirmation, which is the 1 hour bull div, a little bit more closely, right? Those lower time frames may be foreshadowing, hey, that 1 hour bull div is probably going to print, right? You could see here, we finally wound up putting in our bullish divergence on the 1 hour. Obviously, you have those lower lows on your price coming all the way down here, lower lows, higher lows on your momentum waves, giving you that big bullish divergence. And you also wound up getting this again. It did take a little bit longer to print this, but you did wind up getting it on the 2 hour as well. Now, I do get a lot of questions about comparing different time frames and using multiple time frames to find confluence, to add confidence to your trades, and kind of the way that I was looking at the higher time frames to kind of add confidence to this trade as well. So you finally get that 1 hour bullish divergence, and now you're starting to check off those confirmations in your head. We came down to our key level. We put in the bull divs on the lower time frames. Now we're getting one of our main confirmations, which is that 1 hour bullish divergence. And the reason this is more of a strong confirmation is because a bull div on the 1 hour is likely to give you a much bigger move than a bull div on the 15-minute. So you got the 1 hour bull div that was a main confirmation, and then you get the 2 hour bull div also giving you another main confirmation. Now, guys, another big confirmation that we got here, and this one is actually really important and can really make that big difference on whether this divergence will play out or not, and that is money flow coming up not only on the lower time frames like the 15-minute, like the 12-minute, and you could see here shortly after we put in this bullish divergence on the 15-minute, we had money flow kind of come down and then come back to the upside. So once you start seeing that money flow coming back up on the lower time frames like the 15-minute and that 12-minute, another big level of confluence here was the money flow starting to creep up. You could see, even before the divergence printed here, we actually had money flow starting to creep up. So we're looking at that, and that's making me feel pretty good. And then we confirm the bullish divergence on the 2-hour, print another candle, and money flow continued to come up, giving us a little bit of extra confluence. Now that you guys know kind of those main levels of confluence that we were looking at on this specific trade, obviously these confirmations change a lot based off of what time frame you're analyzing, what time frame the setup is actually on. If you're looking to trade the 45-minute time frame, you might not be looking for these exact same confirmations, so I do just want to be clear about that. This is all specific to this actual trade setup. That was just some of the confirmations that we were looking at to kind of really make this a very confident trade. Now, with that being said, I do want to point out that once this trade was given, our main target for this trade was the value area high of the actual volume profile range, right? And again, if you don't know what volume profiles are, or you're just hearing that for the first time, definitely check out the playlist I have on the channel. It'll bring you from A to Z on volume profiles for completely free. Now, I do want to talk a little bit about how we trade on this channel in general, guys, and the volume profile has a big part in how we actually trade. And the reason for that is because it makes price action as predictable, at least as you can get it. Obviously, you can't just predict price action. It's very, very hard to do. If everybody could do that, we would all be bazillionaires and we wouldn't have to try hard or study or practice. But when you use the volume profile, the main thing that it helps you with is giving you these key levels. You have your value area low, which is your key level of support if you are ranging sideways. And then you have your value area high up here, which is your main level of resistance. And then you have your point of control in the middle, which is kind of a middle key level in between your value area high and your value area low. And it is also the area where the most volume was traded within a given range. Again, this is not a volume profile video, so I'm not going to get too deep into it, but I more want to talk about how we use these to actually trade. You can see here, once you come down to your value area low, this is where you're looking for longs. Then you're coming up to your value area high. When you get to your value area high, you're looking for shorts. And then if your short winds up playing out and you get all your confirmations, you are looking to make your way back down towards that value area low, which was the situation that we found ourselves in right here. We knew that we were rejecting the value area high, so we were expecting to come down to our value area low and deviate a little bit from it to the downside to give us this lower low in order to put in the bullish divergence, right? Because if we just came down here and bounced off the value area low and we didn't break down and make a lower low here, we wouldn't have had a bullish divergence, because we would have had a low here and either a higher low here or an equal low here, which if anything could give you an exaggerated divergence, but those aren't very strong anyway. So really what we were looking for here before price came to that level was, hey, if we crack this value area low, come down to our next key level of support, which was that $21,478 level, that's where we could potentially put in our higher low on our momentum, get that bullish divergence, and then get a move up. Now, that is typically how we trade these ranges, but the reason I bring this up, guys, a big question that I get all the time is, hey, Frankie, you talk about the volume profile ranges all the time, and, you know, it's all good and dandy. You could look for longs at the value area low. You could look for shorts at the highs of the range, but obviously, this is only going to play out for so long before price decides to leave the range. And that is a great question, right? Because it all seems foolproof until you realize that you're not going to trade in a range forever, and eventually it's going to deviate away from that range. But by trading the volume profile ranges, guys, and looking for longs at the lows and shorts at the highs, and again, we're not just blindly shorting resistance and blindly longing support. We're finding our confirmations, and we have multiple levels of confluence to get into these positions, right? But what this allows us to do is, if we are constantly looking for longs down here and shorts up here, whether price winds up breaking to the downside or breaking to the upside, likely you will already be in a position from the opposite end of the range, no matter what way the price breaks down, right? If you're looking for shorts up here and you're able to find it and you get into a short position up here and then price comes back down to your value area low, you know, might be smart to take some profit here, but what happens if we break down and come lower? Well, you just turned a short little scalp trade into an absolute home run trade that can wind up paying you out much, much more than you originally planned. And that is where, you know, once you start getting deep in profit here, and maybe once you start losing this range, you could start locking in profit and moving your stop loss to your entry, making it a risk-free trade. And then the worst thing that happens is price will come back up and stop you out in profit, and it's a winning trade, right? So it's a really good way to manage your risk, and it's also a really good way, in this case, kind of played out perfectly. Like I said, let me pull up our actual trade tool here. Right here, right? This is the actual trade that we're in, wound up playing out for about 3.6%. We were really only looking to catch this as a scalp trade from a deviation from the bottom of the range all the way back up to the value area high, where we would be looking for shorts. As a matter of fact, if you come down to the 15-minute, you could see that we put in a nice little bearish divergence here on the 15-minute as we approach that value area high, and that actually made for a really decent scalp to the downside. Again, that target being value area low, and where do we go? Value area high, bearish confirmations, looking for that short. Boom, you come right down to that value area low where you could be looking for bullish confirmations, and then you would be looking to long it back up to the value area high. Now, the reason I bring this up is because this is essentially what we were looking for here, right? We were looking for longs at the bottom of the range. We got in, we were targeting that value area high, and then when you get to that final target here, this is where you can think, hey, if things are looking bullish, which, hey, if you look here, money flow was continuing to come up on the 2-hour, and we actually got a money flow crossover into the green. We're looking like we may get a continuation. At that point, you may not want to close your whole trade here, but just take out about 20%, right? Take partial profits, whether it's 20%, 30%. That's going to be dependent on your actual trading plan and your specific strategy that you're using, and as well as your risk tolerance. But if things are still looking bullish at your main target, what you could do is just take partial profits, move your stop loss to your entry point, right? Now, if you get stopped out, it's still going to be a winning trade because you already took profits. So your stop loss is at break even. And now, if price does continue like you think it is, you're going to ride this up for some more gains, right? So you turn this into a trade that worst case scenario, if it hit your target, worst case at that point is you're going to make, you're going to make that ride from the right below the value area low up to that value area high. Perfect little scalp trade, right? We get these all the time. But now that price has decided to deviate to the upside because we thought things still looked bullish, we are already in that position, that long position, all the way from the bottom of the range, right? And it's the same thing if we didn't break to the upside and we broke to the downside this way, we would likely be in a short. Now, it's not going to play out every single time. Sometimes you don't get your confirmations, and sometimes you miss that short opportunity. But for the most part, if you're mainly looking for your trades at the lows and the highs of your volume profile range, it's going to be very likely that even if price broke down there, you would have been in the short position all the way from up here, and it would have been an amazing entry. So that is why we trade these volume profiles so much, guys, because it makes price action as predictable as possible, and you could catch those little scalps up and those little scalps down as you range sideways. And then when price decides to deviate in one direction or another, it's going to be very likely that you're already in a position from the opposite end of the range. So, guys, I think that's all the time I have for today's video. I just wanted to do this little trade recap to kind of show you guys what runs through my mind when I'm actually looking for these setups, how much confluence I actually look for before actually taking a trade, and kind of the importance of using the volume profile and how it's so powerful at getting you into these long and short positions. And then when price deviates, you're in at a really good entry point. And also, guys, the importance of setting your key levels and just waiting for price to come to your level. It adds so much confidence to your trading because then you're not taking wish-washy trades. If you have the key levels set on your chart, you could just sit back, and if price doesn't come to your level, you don't take the trade. It just makes it very, very easy to know when to take a trade and when not to take a trade. So I hope this was really helpful for the Candle Mafia. Watch this back a few times if you have to. I hope I gave you guys a little bit of insight of what goes through my mind when I'm looking at these trades. If you guys like this video, please let me know in the description down below. And if it seems like you guys like it, I'll do more of these videos so you guys can get even more insight into how I actually trade this crazy crypto price action. So definitely let me know in the comments down below. And if you guys are interested in getting all of these key levels spoon-fed for you, charts shared with you, so you know what to be looking at as far as levels and setups and confluence, so you could be ready to get into that next trade, definitely check that link in the description down below. And don't sleep on our free Discord, guys. We have a completely free Frankie Candles Discord. I also put my personal technical analysis in that channel. I'm in chat talking to you guys, and you could definitely catch some golden gems in there as well. We have a bunch of really good traders in there that love helping out the Candle Mafia. Shout out to the active Discord members. You know who you are. So don't sleep on the free Discord. Definitely get in there as well. And with all that being said, I think that's all the time I got for this video. I'll see you in the next one. Frankie Candle's out.
Here we go, yeah. At the top of the class on a roll, hey. And it's time to run it up, yeah, you know, yeah. Mask down, put the pedal to the floor, yeah. On a roll.